Silver crashed 30% during this Iran war. The safe haven thesis predicted the opposite. The same Iran news has driven silver in opposite directions for 3 consecutive sessions. Structure check. 3 things on today's silver structure. The safe haven claim mainstream media has been pumping all year, the data showing exactly the opposite mechanism is operating and the level that matters most this week. The claim has been pumped across financial media throughout this Iran war. Iran tensions are bullish for silver as a safe haven. The aggressive version called for silver to 150 by year-end on geopolitical premium. 3 outlets ran versions in early March. One ran it again 4 days ago. Here's what the data actually says. Silver hit its all-time high of $121 on January 29th. The Iran war began February 28th. Silver was around $90 the day the war started. By March 23rd, silver had crashed to $61, a 30% drawdown during the period when safe haven demand should have been at its strongest. 2 tests in the last 5 trading days made the contradiction unmistakable. Last Thursday, Iran's supreme leader directed uranium stays in Iran. Oil spiked to $102, and silver fell to $75.33. This past Monday, Iran-Hormuz peace optimism, oil dropped and silver rallied just over 3% to $77.87. This morning, the rally is already gone. Net change Friday to Tuesday is essentially 0. Same news. Opposite directions. 2 consecutive trading sessions. Nothing to do with safe haven flows. Silver wasn't acting as a safe haven during this war. It was acting as an anti-inflation asset getting crushed by the inflation the war caused. Iran tension raises oil prices. Higher oil raises inflation expectations. Higher inflation keeps the Federal Reserve from cutting rates. And when rates stay high, silver, which pays no interest, gets sold for bonds that do. In other words, this war didn't make silver a safer place to hide. It made silver more expensive to own. GoldSilver.com, Mike Maloney's outlet, has been laying this out since April. They got it right. Just a quick aside, if you want these structure checks daily, subscribe and turn on notifications. It'll help the channel grow. Here's what the data actually says about the mechanism. Watch how silver and treasury yields moved this past week. On May 19th, the 10-year yield hit 4.687%, a 16-month high. 30-year hit 5.19%, the highest level since 2007 before the global financial crisis. Silver was in the mid-70s on stalled Iran negotiations. Then came Iran peace optimism. Silver rallied 3% on Monday. With U.S. bond markets closed for Memorial Day, the 10-year yield's response arrived Tuesday, falling more than 6 basis points to 4.51. The dollar slipped further from last week's 6-week high. That wasn't a safe haven trade. That was a rate sensitivity trade, silver responding to lower borrowing costs. In other words, silver in 2026 is acting more like a 30-year bond than like emergency insurance. And the silver supply side isn't the story either. The exchange vaults hold 314 million ounces. J.P. Morgan alone holds 45%. The deliverable portion, silver ready to ship, has built 2.2% since May 12th. No shortage to drive a safe haven panic, even if one were happening. J.P. Morgan's own analysts flagged this anomaly in their March 26th note from Nikolaos Panagyrtzoglou. Bitcoin showed safe haven demand during this war. Gold and silver, the traditional geopolitical hedges, weakened on outflows and rising rates. Major Wall Street institutions acknowledged what the data has been telling us for 3 months. Safe haven narrative didn't survive the inflation channel. 2 levels to watch this week. If silver holds $75 on the close, the currency channel is in play and Monday's rally has legs. If silver clears $77 on volume, the Iran peace bid is confirmed. If silver loses 75, the rates story takes over and Monday's rally was a one-day Iran headline. The next catalyst arrives at 10 o'clock Eastern this morning, the Conference Board's May consumer confidence print. April came in at 92.8. A weak number supports silver. A hot number keeps the Federal Reserve cornered. Watch the price, not the headline. The Iran story isn't driving silver this morning. The bond market is. Until that changes, every Iran headline is just noise on top of the rate trade. Structure checks are part of what the silver catalyst does. Every issue tracks what's moving the silver price. Silver2026.com. $1, 2 weeks of the newsletter, plus the book. If you've heard a silver claim you'd like us to verify, drop it in the comments. Order is strength, and structure is power. Till the next time, I'm the Silver Engineer.